So yeah, hi guys, welcome back. Today is day 5 of trading forex until I become a profitable trader.
Oh my god! Wow!
Yeah, so today there wasn't that much going on. I missed the London Tokyo overlap session, which means I did not get a trade for in the morning, but clearly there was a chance to trade in the morning, and I didn't have it because I missed it. Okay, and yeah, and on the evening session, the overlap between London and New York session, I didn't find any trade there. So today we didn't take any trade. Yeah, but I did try something a bit sketchy. Huh. So I'm going to explain it in a few, but I want me to say also what I'll be explaining today. I finally wrote down my strategy on how I'm going to be following it step by step, day by day until I master it and figure out its chances of making me profitable. If it does well for the next couple of few weeks, we go with it. If it doesn't, we'll change the strategy, but I'm pretty sure it's capable of bringing in good profits consistently. And yeah, so today I'll be explaining it and how it works, and we'll get to familiarize ourselves with it clearly and officially. So without further ado, let's get into it and see what today had to offer. So if you take a look here at my screen, you will notice that this is the trade that we took yesterday, and it shot up to this point right here, up to $4,522, and started going back down. Now the reason it was going back down, remember, it's because of the retracement. After a breakout, always wait for the retracement and then trade back up. Now if I was using a different strategy, let's say if my strategy involved noticing trends and riding trends, which most traders do, I would have probably waited for this pullback right here and then placed my entry right here for it to shoot to the top, okay, and continue forming an uptrend. But again, you're not sure what the market offers. Yeah, you're not sure what news is going to come up, so you better be safe with a strategy that is sure bet. And to me, uh, breakout strategy is more sure bet than riding the trend, because the trend can change at any time. Okay, yeah. So yeah, the pullback came and I knew it was going to shoot up, and I decided to take a trade there, a risky trade outside my strategy, not following the strategy at all. And you guessed it, I ended up panicking. Okay, so I took the trade. It was going up a few times. Let me show you how it went in the 15 minutes time frame, since that's where I was dealing with it majorly. So yeah, so this right here just represents the whole pullback of the breakout, okay, so that it can shoot back up. And at this point right here, after this candlestick right here, I placed an entry there on an uptrend, and yeah, I was buying, and I knew it was going up, but I didn't know how how far it will go up. So I ended up panicking, and throughout this candlestick, it fluctuated very much. There was a lot of volatility. So at some point, the candlestick was here, and then I started asking myself, am I sure with this trade? Like, am I sure it's going to hit my take profit? And I ended up short selling it, short buying it, or whatever you would call it, and I closed the trade right about here before it even got a chance to hit the take profit, giving me almost $13 profit or something like that. It was not good. I don't advise anyone doing that. Just stick to strategy, because at that point, when you do something like that, it can be considered as gambling. Okay, and we don't want to gamble. We want something that is sure bet. We want to follow our strategy to the max and ensure that we master it. Okay, so since there was not much trading today, I'd like to take this chance to explain how the strategy is and what it entails and how to follow it. Okay, so I finally did write it down in a much more sophisticated way so that it can be easy to explain. And here it is. So it's called the breakout strategy. The first step in this strategy is to confirm the market bias, that is whether it's an uptrend, a downtrend, or it's just consolidating. Now in this first step, I like to use bigger time frame, so that will be the 4 hours time frame and the 1 hour time frame mostly. Yeah, and the perfect time to actually start practicing this strategy in your trades is just before the overlap times. That is just before the overlap between the London and the Tokyo session, and the overlap between the London session and the New York session. So what we're going to do is I'm going to explain it visually, and you're going to kind of see what I mean. Okay, so let's take for example this setup right here. Okay, step one is first confirm the market bias. Is it a downtrend, is it an uptrend, or is it just a consolidation? Okay, and right here you can see we are using the 4 hour time frame to determine that. You can see right here, once I draw a trend line, it is a downtrend. Okay, the confirmation of this was our high, this was our low, this was our lower high, a lower low, lower high, and a lower low. Okay, and we are quite interested in this consolidation right here. Remember, the purpose of this strategy is to spot high volatility or high volume breakouts, okay, that have a strong swing. Now, after you have confirmed the market bias, and make sure it's just before the overlaps, because when the overlap happens, that's the time there is much volatility in the market, and most probably there's going to be a larger swing, yeah, towards your predicted side or following the trend. Just before the market overlaps, mark out the highs and the lows of the previous or ongoing session. So that is maybe if you are heading towards the Tokyo and London overlap, whilst you're still in the Tokyo session, it's good to mark out the highs and the lows of the session that you're in. So in this case, you can see, like, for example, right here, what we like to do is, for example, you can say that in this chart we're in the gold versus US dollar. So this is most probably before the London and New York session overlap. Okay, it will mostly be preferred to be like that, and the reason is between the in the London session, gold will have movement, but not as much as when the overlap happens, because then that opens the market for the New York traders, which bring in a lot of orders, and the market becomes volatile. Now, between here, you can see there was not much movement, there was not much price action, and yeah, right before the overlaps in our case. And what I'll do is sort of draw something like that. The top side is our high and the lower side is our low. Now, by confirming that this is a downtrend, we confirmed an area with low volatility or low price movement. Draw our highs and draw our lows. Now, while drawing these highs and lows, there are valid regions to draw them, and there are non-valid regions to mark. For example, Like, let's say this also here is a downtrend. You can see it. This also here is a downtrend. Okay, this whole part here is a downtrend, and there was, after noticing the trend, now it's time for us to mark our highs and our lows. And in this case, remember, we're only trying to trade moving in the same direction as the trend. So in this case, we'll be hoping for a breakout in the lower side of marked area so that we can continue trading on the same direction as the trend. Now, after this downtrend right here, when you come to mark out the highs and the lows, you'll probably mark out that and that as your highs and lows. Now, the only problem with this here is that there's so much movement in between the high and the low, which means there was movement in the previous session of the pair that you're trading. What usually follows after is there will not be that much movement while using this strategy. There will not be that much movement once the overlap happens. Okay, and as you can see right here, it was a downtrend. We marked out this area and there was so much movement, it ended up forming a double bottom right here and broke out through the opposite direction of what we had expected. Remember, it's a downtrend. We were hoping that it breaks out on the lower side so that we can continue trading downwards. Okay, instead it broke out on the upper side and continued trading upwards, which later led to a downtrend. Now, the only case that this is viable is when it's a perfect consolidation, just like this one. It's a perfect consolidation, just like this one. You can see right here, and then price breaks out through the higher end of the marked region. Okay, through the higher end of the consolidation. And what mostly it does most of the times is it takes out your stop loss and gets stopped out, and the money you had risked is used as liquidity by these big trading firms and banks in order to fulfill the orders. Okay, and that is called a liquidity sweep. Now, what mostly happens after a liquidity sweep is price then moves on to break out towards your predicted side, or it continues following the trend. Just after it has taken enough liquidity to trade, it then continues the way you had predicted. And what we are looking at here is a perfect example of that. Okay, so it was a downtrend right here, price consolidated, not much movement, a good place to set up our breakout strategy. We mark out the highs and the lows, and then price breaks out through this side, stops out all the people who had placed their stop losses right around this area, hoping for the trend to go downwards, of which it will. They get stopped out, they're used as liquidity, and the price start pushing downwards. Okay, and that's how it happens. So now you know how to spot between a valid consolidation zone and a non-valid consolidation zone in order to place your trade. Another type of consolidation zone that would likely not be viable is when you cannot identify the market buyers. Okay, if you cannot tell whether it's a bullish trend or a bearish trend, it's mostly advisable do not take any trade that day. Okay, because we are only interested in taking out trades that follow the trend of the market. Okay, so this is our downtrend right here, our perfect consolidation zone. And what our next step is wait for the overlap and wait for a candle with volume to break out through the consolidation zone following the market bias. What that means is we wait. Let's say the overlap starts from somewhere around these two candlesticks right here. So we'll wait, and when the candle with volume closes right below this consolidation zone, that is considered a breakout. Okay, this is a perfect breakout right here. Now if it had closed, if this candlestick had closed in the opposite side, we couldn't have taken this trade. Okay, we couldn't have taken this trade. That is according to this strategy. We couldn't have taken this trade, and we'll just close our laptop. If it's in the morning, in the overlap between the Tokyo session and London session, just close it and wait for the next overlap. If it's the evening one, yeah, not trade that day. Okay, yeah. So yeah, this candle closes right out of the consolidation zone. And what our next step is, looking for an entry. Okay, our next step is looking for a perfect entry. Now only look for an entry when the candle closes following the trend. Okay, that's what I just said. If it does the opposite, we wait and see if it later closes according to the trend, since it could just be a liquidity sweep, just as I have explained to you. And these are not better for the Tokyo session and London session overlap. All these should be between the first 2 hours since the London session opens. Okay, now there is usually 1 hour of overlap between those two sessions, and you have until 2 hours since the London session opens to make sure if you're going to make an entry. Now if price hasn't broken out of the consolidation zone between these 2 hours, just don't place a trade, don't look for an entry, and wait for the next overlap session. Okay, our fourth step and final step is, if everything falls into play just like this session right here, you wait for a retracement, mostly in small time frames, and place an entry with a risk reward ratio of 1.5 to 2.5. Now those are the rules of the strategy right there. And so what we are going to do here is, this just broke out of the consolidation zone right here. So what we are going to do is head down to a much smaller time frame, okay. So we are in the 15 minutes time frame, and you can see the candle that closed right here. Okay, let me play it back for you to where it is. Okay, so now we are in the 15 minutes time frame, and as you can see, the candle which broke out of the consolidation zone is this red candle right here. Okay, and this this blue candle right here represents our retracement back to test the support of this low of the consolidation zone right here. And our best place to place the entry is right here, just after the retracement, to get a chance of getting, better profits. Now what we're going to do, enter a short position right here, place our entry right here where this blue, now assuming that this just hadn't played, where this blue is right here, which represents our retracement right there. And you can have your stop loss just there in the middle of the consolidation zone, as we are guaranteed it will not go back up there. Price is shooting down right after the breakout, and you can look for a reward ratio of between 1.5 to 2. I like to do a good 2 or a 2.5 once I notice that, depending on the level of swings that we are expecting to get. So, and once we play it, and right there, our take profit is hit. Okay, So that's basically the strategy, and that's what I'm going to do. That's what I'm going to follow. I will show you another example, and we just recently filmed that example in our previous episode, and let's dive into it. Now, in our real example, the trade takes place in the 4-hour time frame, and we are just going to play it back up to when the consolidation happened. Right here, okay? So, we notice the market bias, it's an uptrend. There is a perfect consolidation zone. Mark of the highs and the lows. And we are expecting the market to break out from the top, okay, since it's an uptrend right here. And we play it right there. The market breaks out, okay? The market breaks out right there. And now what we're going to do again, go to a smaller time frame, confirm the retracement, in order to get a perfect entry. Now let's head down to the 15 minutes time frame. Okay, so in the 5 minutes time frame, you get to see the retracement pretty well, okay? And where exactly I took the trade. Now you can see the trend, the price breaking out of the consolidation zone right here, goes up and then forms this retracement down here. Now the lowest point where this retracement reached is right here in form of a wick, but the candle itself didn't close where the wick is, and the closest point we have to the retracement reaching the retesting the support zone of the consolidation, the resistance zone, sorry, of the consolidation zone is right here I mean, and that's where we find our perfect entry, and we place our buying trade. We enter a long position right there, place our stop loss right where, you know, the market, the consolidation zone begins. We place our stop loss right there, and then we set up a risk reward ratio of 2. You can do a 2.5, but in this case I didn't think it was going to be a huge trade, a huge swing, so I actually placed a risk reward ratio of 2. That is just fine, and when we decide to play it, you can see where it goes directly to hit our take profit. And right here our take profit is hit. So yeah, that's the strategy. That's what I plan on using now for the rest of my trading days until it proves to me that it's not profitable. I will be using it. So go back to a 1 hour time frame, and you can see what we are expecting right here is another consolidation zone to form. It will be a perfect way to execute our breakout, and hopefully it falls right into play, okay, considering that this is an uptrend right here, just formed an uptrend, and the breakout of the previous consolidation zone happens just to have a retracement back to the consolidation zone and then up, which is where I mistakenly placed a trade out of without using my strategy today. And I know that prediction, once it breaks, this was the pullback right here, this action right here, and once this price right here is broken, it's guaranteed that it's going to be an uptrend, okay, because this high will be broken. If this resistance, so this resistance of the sausage consolidation zone that is happening right now will also double down as our valid breaking point. Okay, once it breaks through that, once the price breaks through that, we'll be safe to place another trade. So that's what we are currently waiting on. See you on the next trade. Stay fresh and remember, stay consistent. Let's get it. Peace.